Hi everybody, my name is Matt Palmer. I'm the operations manager for CWJstone.com. We're here in the studio today with Don Johnstone to talk about mortgages. We have a few frequently asked questions, and me personally, as a potential first-time home buyer, I'm interested in a lot of the answers that he has to give. So, Don, welcome to the studio.
Yeah, hi Matt, how you doing?
I'm doing great, thanks. So, first off, can you give us a little bit of your background? What's your history in the mortgage broker industry?
Matt, I've been a mortgage broker for about 10 to 12 years. I started out as an agent with a large brokerage company here in Canada. I came from a background of financial planning and financial services, and have been mostly in the Fergus, Elora, Kitchener, Guelph area. I have a couple thousand clients, have done a couple thousand mortgages in the area. And 2 years ago, I got my broker designation, so I'm a fully licensed under the Financial Securities Commission as a licensed mortgage broker here.
Okay, great. So I'm not very clear on what exactly a mortgage is. Can you tell me what a mortgage is and what your role is as a broker versus a bank?
Well, a mortgage is a debt instrument that is secured against real estate, where let me give you an example. You go into the bank and you want to borrow $5,000. They'll give you $5,000 maybe on a signature loan. If you want to buy a $30,000 car, they're going to give you a secured loan. So they're going to secure their loan against that vehicle, so in the event of default, they can repossess the vehicle primarily. Okay? When they do real estate, it's called a mortgage. So what they do is they register a mortgage at the title office that puts a lien against that property. So in the event that for whatever reason you defaulted or you sold the property, the mortgage company gets paid first. So it's simply just a lien or against the property to secure the loan. In order so you can get large amounts of money, to borrow enough money for real estate, you have to put a mortgage against the property.
Okay, that makes a lot of sense actually. Okay. Thank you. Can you tell me a little bit about the process? How would I go about applying for a mortgage?
Well, the process is quite simple, Matt, actually. The first thing we do is we sit down and we go through a preliminary meeting with people where we do some sort of budgetary planning. We try to sit down with people and determine what they can afford, what they're comfortable with, what their lifestyle is, how much money they make, how stable is their income, do they see future income. Then we talk to them about their current debt load, do they see an increase in income, things like that we want to make sure that they're purchasing a home that they can afford and that they can live in and they're happy with. And then we go to the next step of the process where we start taking a little bit more personal information, where we'll sit down and take your date of birth and all the personal information you need for a mortgage application. And then at the bottom, we'll kind of figure out, what you can afford and what you feel comfortable with. And then the next process is we take that application and submit it to a lender for a pre-approval.
Okay, great. So the pre-approval process itself, I'm not exactly clear on what that is. Can you explain what a pre-approval is?
Well, like I explained, we go through that process where we sit down with people and kind of go through their wants, their needs, their desires, what they're comfortable with, what they want to accomplish, what home they may be looking for. Some people come to us and they already have a predetermined idea where they want to live, the type of home they want to live in. They might even know the price. So we sit down with them and take them through all that process. We take all their personal information. We pull a credit bureau, which gives us a snapshot of where their credit is. We may ask them for job letters, pay stubs, proof of income. We're going to discuss areas like down payment and closing costs and make sure that they can meet all the requirements. So what we do is create a situation where if you were to buy today, could I be approved? We then take that application, submit it to a series of lenders, and they'll come back to us with a pre-approval. What that says simply is, if the information that you gave us in the application was true and correct, then we're prepared to give you a mortgage for X amount of dollars. And the second thing it does for you is it holds the rate for you. Most lenders will say, if you submit an application with us today, we'll guarantee the rate today for a certain period of time. So it really has two benefits for you. It gives you a level of confidence that you're going to get approved for a mortgage if you do find a home, and also it holds the rate for you in the event rates go up. Now, if rates happen to go down, you get the benefit of the lower rate. But what it does protect you from escalating interest rates.
That's great. So you can almost use that as a tool to help you in your home search, help you find a realistic house.
That's right. Well, yeah, it's very important. I mean, I've had clients come to me and say, we just made an offer on a house and it was $50,000 above their budget. Not only what they felt they were comfortable in paying, but how much money the lender would actually give them. So they'd already went out and spent all that time, looked at all the homes, went through the whole process, got emotionally involved, found their, quote, dream house. Everybody's excited. The real estate agent just made a sale. The customer's looking for a home. They come to me, and I have to be the bearer of bad news. Where had they known up front what they could afford, they probably would have not had been disappointed like that. So it's very important from two points. One is to know what you can afford and what the bank's willing to lend you, but also what you feel comfortable in paying. You know, what's your budget? What do you feel comfortable in terms of lifestyle? Because you don't want to be house poor. You don't want to be spending all your money on your house, and you don't have enough, you know, because it sometimes requires a lifestyle change in order to buy a home. Okay?
That's really great info, actually.
Okay.
I don't know that a lot of people would have been able to use that or had known that beforehand, so thank you.